Let's look at this chart. After going through price correction and sideways, the share price plunged and formed a gap down here. It eventually reversed its downtrend into an uptrend from this candlestick, which is known as startup candlestick. It's not easy to predetermine this turning point, but it can be done through the small gap down here. First and foremost, we will look for the bottom point before the gap and mark it as point A. Then, mark the highest point before the gap as point B and the position of the gap down as point C. After having these 3 points, we can subsequently draw a line from point A to point C. This will get us a slanting line. Besides that, we need to draw a horizontal line from point B until it connects with the slanting line we have just drawn. The intersection point between the two lines can be marked as point D, and the corresponding candlestick to point D is very likely to be the startup candlestick for an uptrend. It might sound a little bit too complicated to understand. Let me repeat in this simplified chart. When a gap down occurs during price correction of a share, the first thing we have to do is to look for the lowest point before the gap and mark it as point A. Then, mark the highest point before the gap as well as point B. For the position of the gap, mark it as point C. After having these 3 points, we can draw a slanting line to connect point A and C, followed by a horizontal line drawn from point B. Make sure these 2 lines cross each other so that we can mark the intersection point as point D. The corresponding candlestick of point D will be the startup candlestick to predetermine the trend reversal. This is how we predetermine an uptrend from a gap down. Now, will we be able to predetermine an uptrend through a gap up? The answer is yes, and here's how. In this chart, the share was in a sideways pattern before it started to push up from this point. If we manage to make entry at this point, the uptrend can definitely bring us a good profit. The method used to spot a startup candlestick in a gap up is pretty similar. We will mark the highest point before the gap up as point A, the lowest point before the gap up as point B, and the position of the gap up as point C. Then draw a slanting line to connect point A and C, followed by drawing a horizontal line from point B. The intersection point of these 2 lines to be marked as point D, and the corresponding candlestick to point D will be the startup candlestick that we are looking for. Making entry at the position of this startup candlestick not only bring us a good amount of profit, but also help us to skip the price correction or sideways. If you would like to double confirm on the turning point, we can further analyze it using this indicator called OBV. The black color line is OBV energy line, and the line in pink is the moving average line of OBV. On the screen, we have this exactly the same chart. At the point where the 2 drawing lines cross each other, the OBV line upwards cross the MAOBV line as well. It indicates that the momentum of the shares is much stronger here at this point, and it is a safe entry point for us. One thing to note is that the OBV indicator available in the market mostly come with only a single OBV line. If you happen to face such issue, do feel free to drop me a text via my contact details, which can be found in the description box below.